Hello team, hope everyone is well. Welcome back to another video with us at the Mango Method. Today I just wanted to spend a bit of time just to talk about financial modeling as a general, and also just to talk through what we want to do, or the kind of insights and the knowledge that we want to share as a business. So from our perspective, and maybe delving into sort of some of the history and how it came to be might help to provide people some insight as to where the genesis or where the sort of imperative comes from. So I started my career as a business banker or business banking, so commercial lending, lending to small to medium businesses. And a key part of what I did on a day-to-day, aside from just basic banking or helping people with basic banking requirements, was to do credit analysis and look at businesses and analyze financial statements and try to understand, okay, well, should we lend money to these businesses? And lending money is a very basic form of sort of investment analysis, and it's just you're sort of looking with the lens of the bank and going, all right, do we want to lend this business some money, and do we think we'll get paid back? So and without fail, it was a case of building some form of financial model. Some were very simple back in the envelope calculations, and whereas some were quite detailed financial models that built out, quite a build up in the business on capital expenditure, property development or development in aged care. And, I came from a health banking background, so aged care was something we dealt with a lot. So, aged care developments, then moving into trading and operation and valuation of aged care and all of that. So, in all cases, we would build some kind of financial model. In my earlier career in the business bank, and especially dealing with SMEs, oftentimes it was a very basic financial model, but it was really nothing like what we're working with nowadays, where we're looking at full three-way financial models, integrated everything with automation and all of this. It was just, I pulled up an Excel spreadsheet, I tried to create a P&L, a balance sheet, and a cash flow to mirror the business, and that's how it all began. Now, the key thing from all of that is, often in the lending assessment, I found that it wasn't even a case that a business would need to borrow money. They thought they needed to borrow money. And obviously if you're coming to the bank, that's the obvious thinking. But in a lot of instances, what I would do is, in building these financial models, I'd find that these businesses were actually not lacking in money in and of itself. They had a lot of business processes that could have been improved, and in improving those business processes, they could have negated or lowered the need for funding. And it's an interesting thing. When you need the money, it's usually when you find it harder to get than getting or seeking money when you don't need it, because people love giving money to businesses that make a lot of money, but people don't like giving money to businesses that are struggling, but those are the ones that need it. So I don't know if that's an ironic thing, but anyway, that is what it is. So what I found was just doing some basic financial analysis, and that often gave me the clue as to some of the bottlenecks in the business. And working capital was almost always the number one issue. So it was always, we don't have working capital, we need cash, we need an overdraft, not enough money to pay people. It was always constantly an issue. So it's just something that we felt, if businesses could understand their sort of cash conversion cycle, they could understand how they invoice, how the business model works. Okay, I invoice today, I get paid on 30-day terms. But before that, we would have ordered from suppliers. Maybe suppliers provide us some terms, but in reality, we're paying them in 14 days. On top of that, we then hold on to inventory as well, depending on the kind of businesses we worked with. But yeah, let's say they held on to inventory, and then after holding on to inventory, then they make a sale, and then there's also an invoicing period for collection. So that quickly runs into, you're talking 60 days from go to woe before you get paid. And for a lot of businesses, okay, I don't think they're kind of made to think, or they somehow think, or they think, because they've been taught this, that if you grow revenue, it fixes all the problem. But to be honest, like, it's actually a complete reversal. Where in a lot of these cases, if you have a net working capital requirement, growing your revenue actually just creates more of a problem. If you have 60 days from go to woe, when you make your sale, to when you actually collect the cash, every time you make more and more sales, you actually create more of a burden to find funding to fill this gap, this 60-day gap that gets created every time you make a sale. So understanding basics like this, understanding things like, okay, my margins are actually really tight. Well, if that's the case, then, how do I manage that? Do I need to make sure that volume is the crucial thing that we focus on? So focus on selling to people that can provide volume, giving discounts, or purely for the sake of volume. It's obviously not most ideal. You do want to seek as much margin as you can, but it's just really understanding your levers and what you can pull. That is the core thing about financial models. It's from our side, it was going, okay, well, if revenue decreased by 10%, could this business still repay our loan that we're going to give to them? That was the most basic of sensitivity analysis we would always do. 10% revenue down. Okay, what does that mean to cash flow? Okay, what does that mean to the client's ability to repay? What does that do to covenants? Does the debt service cover? Does the interest cover still meet covenant reporting requirements? There's a lot of this kind of analysis that we did as a banker, or I did as a banker, that is sort of the key part of what I want to try and spend time on. You're not going to see too much information from our videos around how to build a financial model. We're not really here. There's so many videos on YouTube that teaches you, YouTube and all other places that teaches you how to build a financial model from scratch. You can jump on the AFM financial model, advanced financial model, or financial modeler certifications. There's a lot of great content out there on how to build a financial model. That's not what we're here for. We have our core financial model where we spent a lot of time and effort and money in developing what we think is really great platform for building a financial model. It's more about getting your business into a financial model, whether you use this or whether you do it on your own. It's understanding the sort of questions to ask. It's understanding the questions to ask of the financial model that can tell you answers about your business. That is what we want to spend most of our time in our videos focusing on. It's delving into the analysis, into the insights. We used to be called Rabbit Insights. And that was always the idea. It's just like, what insights are we getting from these financial models? Now we're the Mango method, where the focus is on the general process, the method that we embody. It's not just the insights, but it's the journey through the insight, or the journey through the process of building a financial model, understanding your actuals, and going through a learning process about your business, and then getting the most out of your financial model. Anyway, hopefully that gives everyone a bit of an insight as to what you'll find, or the types of videos you'll find in this, from this channel. We might do some build content around how some of the drivers in our models work, how to build specific drivers for certain industries, or how drivers work for certain industries, how deferred revenue is used in one industry versus another, or one type of business versus another type of business. So we're going to delve into business models and how they work, but we're not really here to show you how to build a financial model. So anyway, hopefully that gives you a bit of context and background, and hope to see you next time. Thank you for listening.